Welcome back to Rekt Radio, the one and only show that helps you find the signal in the noise. I'm Sunny, and folks, the foundation being built across the crypto ecosystem right now is a sight to behold. We are witnessing the bedrock of the next bull run being poured in real time.
And I'm Cole, here to point out that sometimes what looks like a foundation is actually just wet cement that a lot of people are about to get stuck in. Let's talk about the companies gleefully jumping into the deep end with their shareholders' money.
It's not jumping into the deep end, Cole. It's called getting ahead of the curve. Let's start with the biggest story of the week. SharpLink Gaming, a publicly traded company, just added another $265 million worth of Ethereum to its treasury. Their total ETH holdings are now approaching $2 billion. This is monumental.
Monumental is one word for it. I'd call it monumentally reckless. This is a gaming company, Sonny. Their business is supposed to be, games. Instead, they've effectively turned themselves into a leveraged single-asset crypto hedge fund. What on earth are they thinking? Their company's fate is now completely and utterly tied to the daily whims of the crypto market.
They are thinking about the future. They see that holding an asset like Ethereum, which is essentially a decentralized supercomputer that accrues value as it's used, is a far smarter long-term strategy than letting cash decay in a bank account. This is the evolution of the corporate treasury. It's a strategic investment in the foundational infrastructure of the next generation of the internet. They're not just holding a token, they're holding a piece of the future.
You see a visionary strategy. I see an enormous flash in red light. What happens to their core business when their entire management team is consumed with managing a $2 billion volatile crypto position? What do they tell their shareholders if ETH has a 30% correction? Sorry, our Q3 earnings were wiped out because we're better crypto traders than game developers? It's a massive distraction and a complete betrayal of their original business model. Investors bought a gaming stock, not a seat at a crypto whale's poker table.
It's a brilliant pivot, and this isn't just an Ethereum story. This is a broader trend. We're now seeing public companies starting to disclose significant holdings in Solana as well. The smart money is diversifying beyond just Bitcoin and into the premier high-performance smart contract platforms. They understand that these networks are becoming essential economic layers.
The smart money looks pretty confused right now, Sonny. While you're celebrating these companies going all in, the broader institutional picture is much murkier. The headlines are screaming about huge ETF outflows. So at the same time, SharpLink is making a massive concentrated bet, a different class of institutional money is apparently heading for the exits. That sounds like a major disagreement among the big players.
You're mixing up different strategies. The ETF outflows are likely just short-term traders taking profits or rebalancing. The corporate treasury strategy is a long-term conviction play. And the reason they have conviction in chains like Solana is because it continues to outperform and innovate at a blistering pace. It's consistently leading the market.
Is it leading or is it just stumbling forward the fastest? You can't talk about Solana's innovation without talking about the chaos that comes with it. Look at Pump.Fun, the meme coin launchpad that basically defines the Solana ecosystem right now. They're out there promising changes. Why? Because things broke. The move fast and break things ethos is exciting until you're the one whose money gets broken. This is not a sign of a stable, mature ecosystem. It's a sign of a chaotic laboratory that's using live users as its test subjects.
That chaos is called permissionless innovation. Of course there will be bumps in the road. The fact that the ecosystem can identify issues and adapt so quickly is a sign of strength, not weakness. It's an anti-fragile system. Every challenge it overcomes makes it stronger. The fact that public companies are willing to put SOL on their balance sheets is a testament to that long-term strength, not the short-term bumps.
They're putting a lottery ticket on their balance sheets. They're betting that the chaos will eventually sort itself out, but they're taking on immense risk in the meantime. Promising changes is corporate speak for, we're trying to fix the engine while the plane is still in the air. It's a white-knuckle ride, not a sound investment strategy.
It's a calculated bet, Cole, but I know what we need to do. To get a real sense of the market's health, we need to look at the king. Let's pull up the technicals for Bitcoin on TradingView and see what the charts are telling us.
Please do. After all this talk of corporate gambling and chaotic innovation, I need to see something that resembles a clear signal. What is the great market oracle telling us today?
The signal is one of profound and beautiful stability. I have the one-day chart right here, and the overall summary is a solid neutral.
Neutral? You're celebrating neutrality? Sonny, neutral is the market equivalent of a shrug. It's a sign of absolute confusion. That's not a bullish signal, it's the absence of any signal at all.
Let me explain, because this is where you see the real strength. You have to look at the components. The moving averages, which track the deep underlying trend of the market, are sitting at neutral. The oscillators, which measure the immediate short-term momentum, are also at neutral. Everything is in perfect equilibrium.
That's not equilibrium, that's a flat line. The trend has died, the momentum is gone. The market has completely stalled out. It's like a car that's run out of gas on a perfectly flat road. It's not going forward, it's not going backward, it's just sitting there, waiting for a push. And in my experience, a market that has lost all its energy is far more likely to roll downhill than to suddenly find the strength to climb higher.
You're completely misreading the tea leaves. This is the most bullish setup imaginable after a major rally. The market isn't breaking down, it isn't crashing, it's holding its ground firmly. A neutral reading across the board shows that the massive gains we've made have been fully accepted and consolidated by the market. This isn't a stall, it's the construction of a massive new support level. It's a launchpad being built brick by brick. All that energy that was pushing the price up is now being used to create a powerful foundation for the next leg higher.
You see a foundation, I see a market in a coma. No trend, no momentum, no conviction. This is the definition of peak indecision. The buyers are exhausted, the sellers are cautious, and the entire market is holding its breath. This isn't a launch pad, Sonny. This is the eerie quiet at the top right before the avalanche.
That's all for this episode of Rekt Radio. I see a market building an unshakable base supported by visionary corporate adoption. The future is being built on platforms like Ethereum and Solana, and Bitcoin is providing the stable ground for it. Stay bullish.
And I see companies taking on reckless levels of risk and a market that has lost all of its energy. Don't mistake a flat line for a foundation. Be careful out there. You've been listening to Rekt Radio.